Alright guys, this is going to be more of a psychology video. And again, I just kind of want to brief through this. One thing I have done, which was the time frames, all this other stuff, I just deleted them and I simply just stuck to my favorites here, which is the monthly, the weekly, and the daily. These three time frames, that's it. Because my bias, everything else should be derived from those three time frames. I feel like I'm just like, I don't know why, I just keep feeling like I'm stuck, I'm glued, and I favor some time frames over the other, and I just don't want to do that. Price is fractal. I want to derive a bias and have confluences from these time frames to even take a trade. Of course, the lowest I'm willing to go without a confluence is the 4 hour. From then on, I need a confluence, from like the 4 hour and above. If I have like a 1 hour through like the 3 hour, it usually doesn't work the best unless we're inside like a daily or weekly or monthly PD array. But even then, I think it should be more recent, like the daily or the weekly. The lowest I'm willing to swoop to have a lower time frame trade is the 4 hour confluence. It has to have, the lower time frame trade has to have a 4 hour confluence, 15-minute, and the 1 minute. Again, I'm not willing to swoop anything lower, but again, everything should be derived from the monthly, the weekly, and the daily. Everything else formed nicely here, like I was talking about on this trader here. 12-hour CRT, reached it. I just wasn't able to hold the trade. I just wasn't able to stomach the position. We entered right here. We entered right around here. You can see right here, this is where the entry was. We cut right here. Didn't even reach the objective. I always tell myself, don't aim for the moon, but in certain trades, certain scenarios where you have a weekly confluence, you have a 12-hour, 4-hour, everything is aligning. Certain trade scenarios or certain objectives for your trade scenario will occur, something like this, where you're manipulating. All right, so I'm gonna go over my trading notes that I have here. I've reviewed majority of my trades from October, so I went through every single trade here, and I took notes right here. So I did my Pomodoro 25 minutes right here. I was like analyzing every single trade. What did I do wrong? What did I do right? Come to the conclusion here of my notes, but I just do full screen. We can go over it. All right, so one of them, October trading mistakes. First things first, you always want to learn from your mistakes so then they don't repeat, or if they are a recurring pattern, you can just like simply not make them repeat as often. Certain scenarios where it's like emotional attachment, oversizing, leverage, all this other stuff. Of course, those things are more hard to control since you're pushing the button, since you're making the decision to do that. But certain other mistakes, like using the 2 minutes instead of the 3 minute. If you have a confluence on the 3 minute, why not use that one instead of the 2 minutes? Certain mistakes like that, you just know you won't repeat again. But some mistakes, you will, like taking more than one trade. Like certain scenarios where you can fix this mistake, and then there's certain scenarios where like like this mistake is gonna be hard to fix, but you're gonna try your best to do that. And that's basically the scenarios we have here. All right, so the first mistake here is we rushed the lower time from entry using the 2 minute instead of the 3 minute. That was one mistake I saw, and that just wasn't ideal. And then eventually not waiting for the ideal confluence on the 15/30 minute to be presented. Like the gold trade, we had a 15-minute, inversion, but we didn't have a CRT. We could have taken that trade off of the 15-minute inversion with the 3 minute, buy side imbalance retraced up into. That could have been the trade idea. We would have had break even. And then eventually taking more than one trade. That's one thing I've realized is, less is more. Majority of those higher time frame trades, like the higher time frame confluence trades are the best ones. Why not wait for those instead of trading like the 4 hour, the 15, the 1 minute, the 1 hour, and like just trading those lower time frame, fractal market maker models without having the higher time frame backing you up. Certain scenarios, like just the best trades are the ones where everything is aligning perfectly. Even though price is fractal, when everything aligns perfectly and everything is just like super A plus, those are the best trades. Like today it was super A plus, NQ was super A plus. Those are the trades I want to be taking. All right, another mistake here is emotional attachment to the trade, too much risk. So that's what I realized. And whenever I was trading the 10K account is I would have too much emotional attachment to certain trades. That's why you see, 11, 250, 215 or $11, $40, $40. 10K account trades, we were risking way too much. We weren't able to let the trade run. If I was simply risking like 2% and just letting it run, letting it go, that would have been a better scenario. But again, we've only been trading this type of way. And, like this is like the first full month. We started like mid-September. This has been the full first month. So I'm not really too harsh on myself. But again, I'm trying to learn from these certain mistakes and just implement, like the things I can do to improve myself when using this and like just not make the same mistakes again. What I've been doing recently is just lowering the risk. Today I only risked 2% and we made basically 2.2% basically. We made 2%, so we made it 1-to-1, and I wasn't against that. I wasn't against it. Again, I'm still working on it. I'm still working on my emotional attachment to the trade ideas and to the outcome, but in certain scenarios I know I shouldn't be, and it just really like if I want to be a better trader, I know I'm gonna have to hold these trades longer, and I especially be more patient too to actually have the trade idea form, and then eventually once we take the high probability trade, holding it. That's kind of why I want to lower the trade frequency. And I don't want to go to like just trading every single day, more than one trade, trading every session. I don't want to do that. Like I feel like it's just not aiming for home runs instead of consistency using the system. That's another thing right here. Another one, we're aiming for home runs every single time. The take profit is in unrealistic objectives or just aiming for the profit target to be met. Instead, just chip away at it. I realized, like lower the risk a little bit and then chip away. Of course, it doesn't have to be like, you're lowering it to like 0.5 or 1%. It could be 2%, 1 or 2 to 1%. You lower it and then you just start building that consistency on the trade ideas. Before I was risking like 4%, trying to aim for 1 to 2 when I've never passed a funded account doing that. Like have a good risk, 1 to 2%, do that, continue to do that, and just aim for consistency. Don't aim for a one shot, one kill trade, or just don't aim for one trade to pass you the account. The account, like it isn't ideal, especially if you've never passed an account. That's kind of what I'm just thinking to myself. Like it isn't ideal. Why would you want that? Like, and then if you do pass the account, if you do get a payout and then eventually you fail it, you're gonna be like, what if I did all that and I just got lucky? Aim for consistency and just know it's a repeating pattern that can be occurring, and just like you're just profitable. So yeah, just aim, lower the risk a little bit. That's what I'm doing. Instead of 4%, I'm doing 2%. Aim for 1 to 2, aim for 1 to 1, but have the trade ideas that are high probability, continue to take those and just continue to aim for the consistency to chip away at the profit target. Another mistake was trying to change the system after a couple of losses instead of learning how to improve it. That's another thing. Like I realized, why was I trying to change the system instead of just trying to improve it? It doesn't make sense, like really just like trying to change everything. It doesn't make sense to me at all. Why would I try to change something that I've back tested, I've collected data that I've only been using for a month, for like a month and a half? Why would you want to do that? It doesn't make sense. Why would you want to change something that you've only used for one month and a half? Just continue to build upon it, continue to find some improvement. And even then, before that, we've been using this type of way of trading before and we found some success. We just refined it. Now, we're just been trading it for a little bit. We're finding some success, some profitability, but we just keep making some simple mistakes that are just like emotional attachment, FOMO, not following the rules, simple stuff like that. And it's not the system at all. It's just me, the person that's using the system. Learn how to improve it, learn from my mistakes, understand what my mistakes are, understand what my flaws, my weaknesses are, and just work upon them. And it's really more psychological, because again, the FOMO is psychological, not following the rules, psychological, risking too much, not holding the trade, psychological. Mainly psychological mistakes that I'm making. The system is profitable, just don't know how to use it to that extent yet, but I feel like I will. If like just over time, I give myself, I'm giving myself like half a year using this in my opinion, and I found some success trading crypto. Like just lower time frame wise, profit wise, I don't know what it is. I don't know if it's like just like psychologically wise it's not there, but when I'm swing trading, whenever I'm doing something else in a different market with my own capital, success. Like it just really just comes down to like it's just prop firms really, like they just mess with you in the head. All right, and then getting FOMO and not following the rules in our system. So that's another thing. The gold trader was FOMO. Certain trades, I'm just getting FOMO. Like I enter too early, or I'm not trying to miss the move. I'm entering in a session I shouldn't be, or I'm just taking trades that I know I shouldn't, or I'm taking more than one trade, I'm getting FOMO, and then only focus on CRTs instead of order flows. This is another thing really. So once I started to implement CRTs, I just been just trying to find them on every time frame. Like on the 4 hour, find a 4 hour CRT, go down to the 1 hour, trying to find a 1 hour CRT there. If I don't have anything there, I'll go to the 15, look for 15-minute CRT, and then I find something there and I take a 3-minute entry. And just sometimes it isn't really just like ideal, especially like if it goes against the higher time frame, like the daily or the weekly, it just isn't ideal. Like there's no point of trying to take that. It's not following the order flow. So again, following the order flow, combining everything together instead of just looking for CRTs. That's something I've been trying to fall back upon. Follow the order flow, and then the CRT is just like a little added confluence to give the trade, more of an understanding of why it's more high probability. So yeah, use the PD arrays and the liquidity, liquidity external to internal, forcing a scenario on the lower time frame instead of adapting to order flow. This is another thing, forcing an expectation on the lower time frame. That's what I realized with this USD JPY trade. On the 15-minute time frame, we had a CRT, and then on the 3-minute, we had a BISI. We wanted that to get respected to push up higher, but we're forcing the idea, forcing the scenario, and it just wasn't ideal there. All right, October best trading notes: trading in the ideal range of the CRT for longs, vice versa. Discount for longs, vice versa. So what I mean by this is whenever like we're in a 4 hour CRT, and it just depends on which one we're having. It depends on which one we're having. If we're sweeping the low, we're closing back above, and we're moving up higher, that's ideal. You want to look for the discount longs right there. But if you're sweeping the high, you're coming back down to the 50%, and you want the CRT to reject off of the 50%. Trading anything that's near that equilibrium or that's hitting the 50%. Anything, inside of the premium is not really ideal, and if you're trying to trade that in the premium side, it just won't work, So let me give you an example here. So here in the USD JPY longs right here, we were trying to trade in, we're trying to trade up here in, the premium, taking longs. It just isn't ideal. The best shorts or the best longs would have been over here, in the discount. Even then the 4 hour one was telling us over here. So we should have been trading somewhere around here, near the discount of the range. Anything above here is not really too ideal. So again, using the ideal range for the CRT, and then trading the manipulation into the higher time frame, internal resistance arrays. So what I mean by that is today's trade. What I mean by that is trading the manipulation is this right here. Whenever we're sweeping the lows into a higher time frame PDRA, it doesn't have to be the daily. It could be like a 4-hour one, and then the 15 we're sweeping the lows, we're forming CRT, and that's what makes the the highest probability trade ideas. Whenever we're trading the manipulation and the CRT is like this right here. So for bullish, you want to see the low getting swept, closing back above. That is the manipulation. The ones that form the best trades are those. Sometimes we can trade something like this where we sweep the high, we come back down to 50%, we continue higher. Those are good. Don't get me wrong, those are good, but the ones I like the most trading is whenever we're sweeping and we're closing back above, and we're following the higher time from order flow. We're bullish on the daily here, the weekly and the monthly. We're sweeping the lows, we're closing back above. This CRT is just amazing. And then following the higher time from order flow, monthly, weekly, and daily. What do you think I added these charts or the time frames here only? The ones I'm paying attention to, the favorites. Why do you think I'm only focusing on these, the weekly and the daily? I'm only focusing on these time frames for one reason only. It's because of the order flow. What is the higher time from order flow? If you're following the monthly and the weekly and the daily and what they're telling you, and you're just building upon that from the lower time frames, the trade idea will just be super high probability. That's what I realized. That's kind of why I just deducted all those other ones. Even though the 4 hour and the 1 hour are good and the 15 is good, but I just realized I want to build upon and have the most screen time on the monthly and the weekly and the daily, trying to understand what those 3 time frames are telling me, what market maker model we're in, what CRTs we have, what breakers, order blocks, fair value gaps we have, where are we targeting, what dealing ranges, what standard deviation targets do we have, and just certain scenarios like that where I want to have the most screen time on those time frames, because those time frames are the ones that provide the highest conviction upon your trades on the lower time frame, and those are the time frames that move the market. If I'm being truly honest, the 4 hour doesn't really move the market. The monthly, the weekly, and the daily move the market, and that's kind of why it's important to be trading the manipulation into the higher time frame arrays. So this is what I mean. Whenever we have a 4 hour PD array being tapped up into, having the 15-minute manipulation, this is what I like to see. These are good right here where we sweep the high, we come back down, hit the 50%, we bounce. I just prefer these are like manipulations. They close above, form inversions, and the market is really willing to reverse there. That's what I want to trade. I don't want to trade anything else other than that. And then higher time frame aligns with the lower time frame CRT, both in discount or in premium. So again, if we have a higher time frame CRT, such as the daily or the weekly, I want to see both of them, in the premium or the discount, or hitting 50%. The higher time frame is hitting 50%, and then the lower time frame one, we're still inside of the, the discount, using market maker models with CRT and not only focus on CRT. I feel like during the, the middle of this month, from the second week or the third week, we were mainly focused on CRTs. That just led to us mainly focusing on CRTs, trading CRT without having, conviction upon internal arrays, and just trying to understand where that, daily and weekly candle are trying to go, So that's kind of why, I deducted the other ones, and I'm just mainly focusing on the daily and the weekly, trying to see what those candles are printing and why, and then building upon that from the lower time frame to then find trade ideas after that. So that's basically really it. All I'm trying to focus on is my emotional attachment when it comes to the P&L, my emotional attachment to following my rules. Main thing I'm trying to focus on right now is just breaking these psychological barriers. Whenever I'm risking too much, lower the risk a little bit, cut it in half. Instead of risking 4%, do 2%, aim for 1 to 2. Don't aim for, or aim for a 1 to 1 at times. If you're aiming for consistency, aim for the 1 to 1s, aim for the 1 to 2s. Don't aim for a 1 to 5, 1 to 4. I know some people trade that, but in my case here, I like trading a 1 to 2. That's it. I'm not gonna aim for a 1 to 3, 1 to 4, 1 to 5. I know realistically, I just can't hold for that long for right now, but eventually, that can change. And just lower the risk 2%, 1 to 2, and stop having so much emotional attachment to the trade idea. The trade frequency, it will be there. The trades will repeat. For aiming for consistency, we don't have to hit home runs. We don't have to aim, for the profit target and aiming just for a 1 to 2, 4%, hitting that, passing the account, going rinse and repeat. Eventually that will be the case, but right now I'm just trying to build consistency. And also, we've only been trading this for 1 month, but we've only been trading this for 1 month and a half. I need more time to really just distinguish the characteristics of this trading style and system, and just continue to make it better and better. And then another scenario is following the rules, taking 1 trade a day, following the rules, having at least 3 time frames. It could be the 4 hour and above. It could be, the 15-minute just to the 45-minute, and then, the lower time frame entry. Majority of the time, we just need 2 time frames to align together. But again, these conditions are what makes it more high probability. So whenever we have the manipulation, have the monthly, weekly, and daily all in our favor, premium and discount, all these things have to be put into consideration, and that is what distinguishes the highest probability trades, And then of course, not making these mistakes again. you know, where we're trading 2 minutes instead of 3 minute, not waiting for the 15 or 30 minutes to be presented or taking more than one trade, you know. It's just simple things. And I know emotionally wise, like whenever I'm risking too much or when I'm taking these trades, I'm not able to hold it, I know what I'm doing wrong after the fact, but it's just during the fact that I need to work upon it, you know. Like whenever it's in the moment, I need to work upon that, and just like build my tolerance for holding the trade, for managing it correctly, for being able to stomach, you know, a loss and not revenge trade or, you know, follow, you know, or just trade outside of my system or outside of my or just trade outside of my time, and just like continue to just be more disciplined and just understand, you know, like to scale, you know, is aiming for consistency, aiming to make the system better. You know, losses are learning lessons. That's it. They're lessons to be learned. And the only way you're learning them is if you journal, you review the journal. So that's what I've been doing, is reviewing my journal, reviewing my mistakes like right now, you know, and just trying to get better every single day, reviewing my notes. And that's it. So yeah. Peace.